Welcome back. Zimbabwe last week announced that it is easing controls on the national currency's official exchange rate, allowing it to converge with an interbank rate that the government has permitted businesses to use for commerce. The currency now officially trades at 290.88 Zimbabwean dollars per US dollar, according to data published last Thursday on the central bank's website, after starting the year at 108.66 Zimbabwean dollars per the US greenback. The interbank rate is at 296.68 Zimbabwe dollars. To get a better understanding of the impact this has, Opalua Dapo Thomas, international financial analyst, joins us. Hi, Dapo.
Hi, hello.
Now, what's the situation in Zimbabwe regarding the exchange rate with the US dollar?
Well, it's quite shocking, and let me give you a background to it. So a few weeks ago, analysts, we just woke up to the news that the Zimbabwe dollar was going to be sold to the US dollar at 279 Zimbabwe dollar to a dollar. But that's quite shocking because the Friday, that's the previous week ending, the US dollar was sold at 165.99 Zimbabwe dollar to a dollar. So that's about 40% devaluation. So, I mean, we found out, obviously, the reason for it, but because on Saturday there was an announcement by the president, that's Emmerson Mnangagwa, who was basically saying that he wants everyone, retailers and wholesalers, to adopt the willing buyer, willing seller rate. So what he's trying to do is trying to eliminate all the multiple exchange rates in the country. So in Zimbabwe, there's an auction rate, and the auction rate happens every Tuesday. I mean, we get to know the auction rate every Tuesday when willing buyers and willing sellers come together, bid and ask for dollars. I mean, people that want, manufacturers that want to import different things from different countries, raw materials, consumables, electricity services, thereabouts. So they come look for the allocation of dollars. So you have willing sellers as well. But that rate is different from what we see in the interbank rate. So the interbank rate obviously is determined by the bank, and obviously they look at demand and supply. But there is a black market rate, just like we have in Nigeria here, where in Zimbabwe is at around 400 and something dollars to the US dollar. So what invariably is happening is there's too many multiple exchange rates, and that basically is affecting investors' confidence.
So I know that the Zimbabwean government has tried several methods or strategies to tame the local dollar decline, but are we seeing the effect of these FX inconsistencies on inflation?
Oh, yes, certainly. I mean, when you have exchange rates and volatility or exchange rate inconsistencies, you basically see it in the price of goods and services in the country. I mean, now let's look at it in the long time frame. June 2019, inflation was about maybe 100%, and then obviously it skyrocketed to 800% by June 2020, and then it came back to below in June 2021, came back below 64%, and now we are seeing it touch 100%. Food prices about 150%, month on month 25%. This economy is a sensitive economy to global shock. So obviously you now imagine the impact of the pandemic, imagine the impact of the coronavirus. I mean, and then also we're looking at this Russia-Ukraine situation, and this thing is having a spillover into the Zimbabwean economy. It's very, very sensitive to economic shocks. I mean, high commodity prices will mean that larger allocation of dollars, which they don't even have. The Zimbabwe economy does not have. Will mean that it makes prices of goods and services expensive. So the manufacturers are crying and they're laboring, saying, we don't have enough FX. So how are we going to handle this situation? And this is basically going to affect people, because right now, how much is it a ton of maize sold now? It's different from what it was last month. Like I said, food prices went from 150%, as high as 150%. And we need to understand the context of this, that the Zimbabwean dollar is the worst performing currency in Africa. So when you see it, sensitive to things like this, obviously it affects inflation.
And so the government did try a 10-day ban on bank lending. How did that go? Was that effective, or it didn't work? It's one of the strategies that didn't work. What didn't work there?
Well, the thing with currency, I won't call it currency manipulation, but the thing with when you fix money, when you try and fix exchange rates, or you're trying to alter rates, today you are using a pegged rate, tomorrow you're using a hybrid rate. Today you're saying, okay, you want to float the dollar to the local currency. all those things are, what would I call it, futile, or an exercise in futility if there are still structural issues. Now, the problem here with the Zimbabwean economy and the Zimbabwean government is a lack of fiscal discipline. The lack of fiscal discipline, that whereas you're exceeding your budget. I mean, last year, look at the third quarter of last year, 2021, the Zimbabwean government exceeded their budget by 71%. So when you see things like that, and you are spending more dollars, you have, when you're saying you're not lending it, you're basically putting a what do you call it, a cap on goods and services, putting a cap on manufacturers' demand and supply. So once you affect that, it's not going to work. When you just say, okay, you want to ban, I mean, we've seen it in different countries, even in Nigeria as well, where you are halting the increase of the supply of dollar. I mean, you create a black market rate, because people who have access to this would then go and sell it at a premium on the black market rate. At the end of the day, you're not fixing anything. So the strategy doesn't work. And that's why people are very, very skeptical about it.
So do you see, because you mentioned inflation, and I don't know if you mentioned that it's, surged about 132% in May. That's the highest, that's the first time it has crossed 100% in 10 months. How do you see this? Do you see this going higher, or do you see it, peaking at some point and just going, dropping down?
Well, I see it's going higher. I mean, I was listening to the finance minister of the Zimbabwe government a few days ago, and he talked about how the local currency is being affected because of the rise in greenback. I mean, that's the rise in the US dollar. So I see it's going higher because the US dollar is going higher as well. And then obviously commodity prices, we're in a commodity super cycle now, where you see commodities like copper, gold, oil, and gas, and like we've rightly spoken about, is affecting how economies react. So now, this is a country that is very import dependent. It's a very, very import sensitive economy. Now, if everything is going up higher, we're having supply chain shocks as well. So if you're having this issues going out externally, effectively, it's going to say, okay, it's going to affect the economy, because how do they find a way to mop up all the, how would I put it, all the effects of what's going on outside? So it can't peak anytime soon until things change. So if you're having a rising cost of commodities outside, then you're going to certainly you're going to have rising cost of goods inside, because they import these things. And now with a lack of or inadequate FX, then there's going to be a big problem. So those are two issues that are going on externally and internally. And now, obviously, we have to understand that they have a high debt profile. I mean, they can't really pay most of their debts, and then they're looking at really giving out gold and platinum, or giving out some of their commodities to stand for them as credit worthiness. But then those are the issues we're having in the Zimbabwean economy.
So with all this happening, do you think the Zimbabwe will go back to using the US dollar as a legal tender? Abandon their local US currency in dollars?
Well, I can't write out that idea. I can't write that. I mean, we can't rule it out, because the truth is they've done it in 2019. Even if the country economists, I mean, no economist will support you to use another currency for your own legal tender. But I think they've come to a dilemma where they have to do what's important and not what's right. So if they say, okay, I mean, hyperinflation has ruined the local currency, and it's possible that in 2019, when we're seeing hyperinflation happening, which we're having the same scenario now, we're seeing it happen again. So the truth is, they've got no choice. I mean, it's a choice they have got to look at. It's an option they have to weigh on. Although nobody would obviously support it in theory, but this is not theory. This is not a game of theory. This is a game of real life. These are people's lives here. So how do you see, or how do you maximize the effective use of FX? Maybe if they use it as a legal tender, then that gives the local currency life to relaunch, while right now is declining day on day. I mean, today it's 295 to a dollar. Last week was about 270. So who knows how long it will spiral. So these are the issues, but it's possible they are looking at it. It's an option they've got to look at. I mean, the central bank governor wasn't dissuaded. It wasn't dissuaded when people talk down about it. So it's something they're looking at. I mean, but what they have to do is kind of bring back confidence into the Zimbabwean economy.
Okay, so just before I let you go, do you have any policy recommendations you think something can be done? What would you recommend for the Zimbabwean government, especially for the dollar?
Oh, yes, certainly. I have a lot of policy recommendations for the Zimbabwean economy. The first thing they have to do is to go back to the drawing board to see how they can improve the supply of dollars into the economy. I mean, like I said, import substitution is the panacea for exchange rate volatility. So if they produce things, I mean, they export a lot of things, tobacco, sugar confectionaries, and different other raw materials. But how can they make services based industry where people can come in and investors can come in and bring dollars. I mean, even the average man knows that the Zimbabwe economy is not what I call it excellent. I mean, everyone mocks the Zimbabwe currency. So how do you restore confidence and perception into the economies? By being producing. If you produce stuff, you have what I call it. If you produce stuff, you have people coming in, bringing in dollars, and also you need to bring back confidence into the economy. And the only way you can do that is by having fiscal discipline. You're not going to exceed your budget by 71%. That is wrong. So when you stop printing money, you live within your means and produce, then again, we'll bring them to your economy.
Thank you so much, Oluwadapo Thomas, international financial analyst. Thank you so much for joining us on the program and sharing your thoughts with us.
Thank you for having me.